Hello, everyone. Good morning. It's 8:36 a.m. Local time. That's about 7:36 a.m. UTC. And happy Friday to everyone. And of course, I'm very excited to welcome you to our final day of the week review session of the Forex Morning Mastery. Well, today's session is starting like an hour earlier than expected, as I do have some domestic activities that I need to run through. Moving to my new home, and I'm trying to ensure that things are done the right way or the way I have expected. So it's going to be taking most of my time. So I had to start this one early enough. I hope this does not disturb your schedule for today. And for those of you who will be joining later on, well, it's going to be open. The live stream will be open for you to watch the replay. So once again, I'm very excited to welcome you to today's session. And as always, today being the final trading day of the week, we will be delving into how well we have done so far this week, and of course, see how we can strategically position ourselves for the final trading day activity. Then there's also the psychological expectations about Fridays, where it is expected that market participants will be rounding up their trading activities ahead of the weekend. Traditionally, this usually takes the idea of taking some profit off the chart, and technically we see this reflect on the chart as price action moving in the opposite direction of the prior leading price action. So we are going to be taking all of this into account while we review our current position. And so far this week, we have done fantastically well across the assets we are monitoring. Remember, we have been monitoring the USOILSPOT, the USDJPY, and of course the XAUUSD, popularly known as the gold spot. And it's quite an interesting week so far for every one of us in this community, as we are all on the green side of our portfolio. So, before we go into the business for today, I always like to welcome newcomers in the house and, of course, intimate you on what we really do here on the Forex Morning Mastery. My own name is Sharif Daramola, and I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective. Now, what we usually do here is that basically, and it's important for you to also understand that this is not a signal service platform, but an educational avenue where we come together to understand how market participants are thinking, and of course see how that reflects on the chart through the lens of price action, and of course taking a little bit of fundamental factors into account to strategically position ourselves for the next move. So this is basically what we do here, and it happens 3 times in a week: Monday, Wednesday, and of course Friday. So once again, I'm excited to welcome you, and feel free to engage in the comment section. So with that said, here we will be diving right into the charts. And as always, the first thing we normally do is to keep tabs with the fundamentals around the US dollar market dynamic. Of course, we know how important the US dollar is to all of the assets we are monitoring. There is no way you want to trade the US oil without understanding the US dollar market. Same with the USDJPY and of course the XAUUSD. Now, for today, there is no major event for today, and of course, the Fed's hawkish stance from Wednesday's trading session. No major market today. All will result into markets waiting for a bunch of Fed speeches coming up today. So look at what we have here on Friday, May 9. We have Williams, we have Barr, we have Kogler, we have Goldsby, Waller, Williams, Cook, Hamak, and Musalem. So we have about 1, 2, 3, 4, 5, 6, 7, 8, 9 Fed officials are going to be speaking today. Now, what this simply means is that the US dollar is, well, at the moment, the US dollar is doing very well, thanks to a couple of fundamental factors, which I will be explaining in a moment. But it's important for us to know that since today we do not have any major data to hang on to, traders will be looking forward to every word from the Fed officials to decide what happen next. And how do we intend to prepare for this? Well, it's important for us to mark out the timing of this event, as you can see on my screen. So if you don't mind, you can mark out the timing on your calendar, and especially the ones around the New York sessions. That's where volatility may spike. And remember, we are not chasing the moves, especially early in the day. We want to today we are going to be looking out for technical structures that will reflect, that will give us an insight into the sentiment in the current market dynamic. And so far this week, the US dollar has done pretty well, and just like what I had expected at the beginning of the week. So what you are seeing on my screen right now is the US dollar index, that is the DXY. This gives us an idea into the general outlook of the US dollar. And though the US dollar has been dropping since the beginning of the year, however, we noticed something interesting on this chart in the last couple of weeks. We saw here that ever since price action tested that area around the $98 level, we saw that price sellers were finding it difficult to break through that area. And of course, this led to a series of higher lows, giving us a potential rebound structure to work with. So since last week, we have been considering reversal setups around this area. And at the beginning of the weeks, I called our attention to the emergence of a reversal setup in the form of an inverse head and shoulder. To give a visual illustration of what I'm talking about, so we had the impulsive move right here. We have the left shoulder, then we had the head of the inverse, and then we had the right shoulder somewhere around here. And of course, the neckline of that reversal pattern was this red dotted line you see here. And last week we saw price break out of that structure, and during our live stream on Monday and Wednesday, I talked about the fact that sellers were finding it difficult to break down the structure, making it a potential platform that could send price climbing to the upside. And look at what happened right here on Wednesday. We saw that move, giving us that significant run into the $101 area. And of course, this was influenced by, most importantly, the activity on Wednesday. So let's look at the economic calendar. So we saw the Fed interest rate decision, where the Fed maintained interest rates between 4.25 and 4.5%, signaling a commitment to controlling inflation. And of course, we all had expected this based on the narrative we saw from last week, and this stance supported the US dollar by attracting investors who brought their capital into the US dollar. Now, the question here is, will this momentum sustain? And of course, to further help the US dollar, we saw some strong economic growth. The US economy projected to grow by 2.7% in 2020, this year, outpacing other developed countries. And this robust growth also underpins the strength of the US dollar. Then yesterday we saw some very interesting labor figures. We had the initial jobless claim count coming in lesser than what market had expected, and of course lesser than the previous month data, which was at 241,000. So the actual data came in at 228,000, showing that there is an improved job availability in the U.S. economy, which is a very good sign for the US dollar. Then we also saw the unit labor cost here, which came in at 5.7%, way above the previous month data. Now, for those who don't know, the unit labor cost is an indicator of trend in production cost, share prices, and of course inflation. So these are very good data that further helped the US dollar. Then yesterday we saw Trump and the president of UK, Starmer, had a discussion over an agreement in tariffs, which is also a boost to the US dollar. So this old trajectory we saw here in the last 48 hours was quite impressive, and thanks to the Federal Reserve hawkish stance and of course the strong economic growth. Now, in as much as this is the case, we cannot ignore the fact that the dollar has been on a strong downtrend. The momentum is still very bearish, and the move we saw in the last 48 hours could still turn out to be just a retracement of the strong bearish impulsive leg we saw. Now, if we look at the fundamental factors, the Trump administration's imposition of steep tariff has also sparked trade tension, leading to concerns about global economic slowdown, and of course had contributed to the reduced demand for the US dollar. Now, we cannot ignore the fact that this is in play and that sellers still have a chance to push price of the US dollar to the downside. Then foreign investors have also reduced their holding of US assets, with reports indicating a $63 billion outflow from equities over the last 2 months. Now, this trend diminishes demand for the US dollar in real sense. Now, with the dollar depreciating significantly, eroding returns for foreign investors and prompting a revaluation of its reserve currency status, are we going to continue to see the dollar rise, or is the market, let me put it this way, is the market going to have a renewed desire to buy the US dollar? So that is why it is important for us to monitor what the Fed officials are going to be saying today, as whatever they say today will definitely give market participants an insight into future monetary policies. So that is basically what is going on around the US dollar. And with this little insight into the US dollar market dynamic, let's delve into the assets we are monitoring for this week. If you have any questions, I would really love to hear from you. If you need some clarifications, feel free to drop them in the comment section. So I see Trader in the comment section saying that, do you come live every day? Of course not. I do not come live every day. We do the Forex Morning Mastery on Monday, Wednesday, and Friday. I personally don't trade all of the days in the week. I trade 3 times in a week. That is Mondays. I take a break on Tuesday, allow the market to resettle, repositioning, come back on Wednesday again and trade, and then leave Thursday off for market to reposition, and then come back on Friday. So basically, this is what we do here. So you are highly welcome, trader. So moving into the business for today. So the first asset we are going to be taking on this morning, as always, is going to be the USOILSPOT. And so far this week, we have done very, very well on this asset. If you would ask me, we've done pretty well. We have been buying the US crude oil since the beginning of the week, and right here on the 4 hours time frame, the $56 level was our key level for the week, and we saw that despite the strong bearish move in this market, we saw how that $56 area became a barrier for sellers. And every time sellers try to break through the structure, we saw our buyers come in. And as a result of this observation, we decided to consider buying the USOILSPOT at the beginning of the week. And after monitoring the character of price action around that key level, which is more evident on the 1 hour time frame, this was what we were able to come up with. Though the week started on a strong bearish note, as you see here, we saw price drop significantly into the $55.50 level. Then we saw buy pressure resume around that area. Now, the continued buy pressure here and the inability of sellers to break through was a good signal for us to join a buy. And based on the fundamental factors as well, remember we talked about the major market drivers influencing the USOILSPOT. We had easing tension and a scheduled meeting between the US and China, which of course boosted sentiment around the US crude oil. Then we also had sanctions on Chinese refineries, which also served as a clog in the distribution of oil in the global market. So as a result of this, we saw renewed sentiment, and then we bought above the $56 area. And I did mention here on Monday that for those of us who missed out on the breakout of the $56 area, that we wait and see if the market will come back to retest the structure, which obviously never happened. And we said if this does not happen, then the breakout retest of the $58.20 level will be all we need to confirm the second entry, and of course use this to maximize that bullish move. So we rode the momentum all the way into the $59.50 level, and on Wednesday during our live stream we marked out a new structure here. Remember, we said we were going to be adding more buy at the breakout of the $59.50 level. In fact, I had that buy position triggered right here on Wednesday, but unfortunately that buy did not do very well, and we were stopped out in a loss on that one. And I mentioned that we will be looking out for a reversal setup if that will be the case. That is, if we are taken out of the buy position, a reversal setup and a breakdown of both the ascending trend line and that $59.20 level will trigger a sell position for us. And that was exactly what happened. We saw price move over 150 pips move in that regard, and I do hope you moved your stop losses accordingly. Remember, this is what we do here in this community. As soon as price moves significantly well in our favor, we move stop losses to secure the position. If you had done that, you must have been taken out of that sell position with a modest size of profit. And for those of us who have been part of this profitable journey, well done and kudos to you. So this morning, while I was looking at the chart, I was preparing to see if the bearish momentum we saw on Wednesday will continue, or are we likely going to see price climb up. Now, one thing we need to take into account is that there is a trade optimism right now from the US-China situation, which obviously has boosted the sentiment around the crude oil market. Then yesterday we saw a United States, United Kingdom breakthrough trade deal where lower tariffs on imports and auto have been enhanced across the border, and this signals improving economic cooperation between the two countries. Now, this for me is a sign, a subtle boost for demand expectations around the crude oil, and this could be could be seen as a positive signal for buyers of the US crude oil, especially considering the fact that the crude oil at the moment is very, very cheap. So while I was looking at the chart this morning, this was what I was able to come up with. I saw a beautiful setup on the 15 minutes time frame, and this was exactly what made me to consider buying the US crude oil. Now, if you look at the bottom of your screen, you will see that I already have two buy positions running with over 50 pips each, dovetailing to a total of about 100 pips. And this was what helped me in making that decision this morning. So I saw this range bound structure, of course, where price in the last 12 hours or so has been confined within the $59.95 level and the $59.60 area. And this is coming after that massive bullish move we saw yesterday. And you know how we treat our range bound structure. We wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, for the fact that price was still trading above the trend line, I was very strong. I strongly believed that price may continue that uptrend scenario. So I placed a buy stop order above the resistance line of that range bound structure, and that is where I am right now. So what I will be doing at the moment is to move my stop losses to secure some profit, which I will be doing right away while we continue to monitor price action around this area. So I've moved my stop losses now. If you took advantage of this opportunity, if you saw this setup and you took advantage of it, well, I will be suggesting that you move your stop losses right now and secure some profit. Now, for those of us who had missed out on this opportunity, I will suggest that at this juncture, you want to exercise some patience and let's wait to see how the market will play out. We already have a breakout of a significant structure in the form of the resistance line of that range bound structure. And from a theoretical standpoint, it is expected that when price breaks out of a structure like this, it may come back to retest it in an attempt to continue the uptrend scenario. So one of the things I will be looking at right now is to see if price will come back to retest the structure. So if it does, you want to position yourself right around this area or this trend line to continue the uptrend move. But if that is not the case and the momentum is so strong, then we shall be looking forward to the breakout retest of the $60.36 level, somewhere right here. So this is the highest point price action has gotten to this week. So we want to be acknowledging that level, right? And then let's see if the price will break out, retest the structure. If it does, I'm willing to add more buy position. If you are yet to take a trade, I guess it could be a good opportunity to join. So I will place another buy stop order here. Breakout retest of that structure will welcome more buying ideas for me. So let me place that there and then have my stop loss around the $60.20 level. So that is what I am looking at today on the US crude oil. However, in as much as we are very optimistic that price will continue the uptrend based on what we have seen on the chart right now, which reflects the current sentiment, or let me say, reflect how the market participants are digesting the fundamentals. Never forget that the OPEC Plus still plan to increase production in June. I think it was formerly in May, but they shifted it to June, and this could add potential oversupply pressure into the market, especially if demand doesn't accelerate fast enough. So in that regard, it could this sentiment alone could cap the upward trajectory. So we need to take this into account. Then there is this slight OPEC Plus output drop in April, while we saw involuntary losses from Libya, Venezuela, and Iraq, which suggests supply will resume. And this, for me, could also push this supply market higher. And as a result, we could see this uptrend scenario cap. Then besides this, the psychological expectations about profit-taking activities around Friday's trading session, trading activities ahead of the weekend, we could see some pullback happen around the structure, possibly resulting into technical profit taking. So because of that, we will not ignore the potentials that sellers can also come in. So what I will be doing here, what are the things that I want to see on this chart that will make me consider selling? Now, we already have a trend line here, this ascending trend line, and you know how we use our trend lines in this community. If we have an ascending trend line like this, price remains above them, we'll continue to look out for patterns and structures that support buying idea. But if price breaks down the ascending trend line, this signals a shift in momentum, and you could see price drop to the downside. So if I want to consider selling, I want to see price break down, not only break down, because a breakdown could turn out to be a false one. We want to see a true breakdown, and this will reflect on the chart as a breakdown retest of structure. Then I want to consider selling the USOILSPOT. And if we further see price break down the $59.95 level, it could welcome, $59.85 level, it could welcome more selling ideas. So this is basically what I'm going to be looking at today. Currently, we are expecting a bullish scenario. Price is above the ascending trend line. We're looking forward to another breakout of the $60.36 level to add more positions to the existing trade. So there you have it, my in-depth look at the USOILSPOT today. I hope I made myself very clear, but if I didn't, or you need some clarifications, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. All right. So, in the absence of no questions, I saw your comment, trader. You said on U.S. oil. Oh, is that question in follow up to the first question? If it is, we run all of these 3 times in a week: Mondays, Wednesdays, and Friday. I hope I answered your question right, trader. Okay, so in the absence of no questions, I guess we are all on the same page. So let's see how the market plays out. And of course, I will be updating us accordingly on my Telegram platform if any new thing is observed in this market. So I wish us all the best of luck on the USL spot. Moving on. So the next asset we are looking at is the USDJPY, and of course on this one too we've done very well on the USDJPY. Remember at the beginning of the week we were selling the USDJPY. We sold the breakdown of the 144.00 and 144.735 right here. We joined the momentum all the way to the downside. I think we scooped over 150 pips on that one before the bullish, 120 pips before the bullish momentum came in. And during our live stream on Wednesday, that is in anticipation of the FOMC release, this was the setup we had. I think it was on the 15 minutes time frame where we identified a range bound structure, and this was reflection of the anticipation of the FOMC. Now we know when this is happening, we see major key players step aside, and this reflected that expectations here. And of course we said here that we will consider the uptrend scenario if price breaks out and retests the 143.300, which was exactly what happened. And since that moment we've seen price move all the way up into the 146.150 area sort of a thing. And I placed my TP for that buy around the, let me look at the history of the trade. So you can see the third one on your screen. That is it right there. I placed at the 145.900, and we saw we were able to scoop in close to over 100 pips. I think I used a 0.02 lot size on that one. So it was a formidable trade, and for those of us who capitalize on the strong bullish move, well done and kudos to you all. I do hope you are already out of that position. Now, since price tested that 146.200 area, we've seen the Japanese yen regain strength on rising inflation and rate hike signal from the Bank of Japan. But I still think that the bullish momentum we see in favor of the Japanese yen, this is it right here. So when the USDJPY drops, it means that the yen is rising, right? So I still think that this rise in the yen may face some hindrances, especially from the strong US dollar and market risk appetite. Now, what are the chances that buyers will come to stay here, and what are the chances that sellers will continue this move to the downside? Or is this just a retracement of that bullish move we saw started here yesterday? Well, if we look at the market driver, a lot of things are in play right now. The US dollar strength was one of the major reasons we saw that bullish move following the Fed's hawkish pause and no signs of rate cuts anytime soon based on the narrative the Fed chairman gave. And then we saw declining real wages in Japan, which also undermines the sustainability of consumer-led inflation in the long term. Then the trade deal between the US UK is also a factor here that reduces global recession fears, fueling risk appetite, and this definitely may weigh on the Japanese yen. Now, looking at this factor here, you would agree that the dollar may take this as an advantage to continue the uptrend move. Now, while I was looking at the chart this morning, on the 1 hour time frame, I think, I had a new structural detail here. Now, the first thing I observed here is this ascending trend line. You can see it right here. So this is ascending trend line. So this is giving us, this is a reflection of the current market sentiment. So how is the market digesting these fundamentals at the moment? I think they're leaning towards the buy, right? They're leaning towards the US dollar. We saw price breakout, retest that trend line. It got into the 146 area. Then we saw this old move during the Asian session, bringing price back into that ascending trend line, a line, or let me say a juncture that shares a confluence with a previous support line at the 145.100 area. And you would agree with me that we are at a crucial juncture where, depending on whatever happens around this area, will determine if we are going upward or maybe going to the downside. So if we see price evolve into something like a double bottom structure, breakout retest of the neckline will give us a good confirmation to join an uptrend move. Then we had more position at the breakout of the 146.00 area to maximize the potential of that bullish move. However, if we consider the Bank of Japan rate hike expectations, as we saw from the minutes from the Bank of Japan yesterday, what time? Okay, yesterday, yes, around 11:50 p.m. That was on Wednesday, sorry. On Wednesday, we saw the publication of the monetary policy meeting minutes, and this gave us an insight into potential rate hike expectations, and of course it also confirmed readiness to hike interest rate again before the year end if inflation persists. So for me, this is a rare hawkish tone that supports the Japanese yen. So if inflation, according to the narrative of that minute, if inflation persists, they are likely going to increase interest rate again. So this is a very positive signal for the Japanese yen, but we already start seeing the reflection of this during the Asian session. But will it last long? Is it a momentary downtrend, or is it going to be for a long term? Then if we look at the escalating, the geopolitical tension, escalation around the Ukraine, the Middle East, the India-Pakistan situation, this obviously could boost the Japanese yen and might likely break down, retest the trend line ahead of the weekend to incite a sell-off. Then the economic, I think we had some other events from the, okay, we have labor cash earning, which was low from the Japanese economic docket. We don't have anyone today. So it's important we remain cautious around this area. I'm not going to be compulsively trading this market today. We are at a critical juncture, so we'll need some time. It could take about 2-3 hours for this whole situation to mature. So what we are looking for around the structure now is to see if we have a double bottom structure or any form of reversal pattern, and then buy the breakout retest to continue the trend to the upside. Then we want to be adding more buy positions at the breakout of the 146.00 area. So that is what we are looking at to buy. So we need some time. Let's exercise patience. 2-3 hours will do just fine for us to ensure that we are in the right direction. Then the contrary is, if price can break down this trend line, then we could be preparing ourselves for a bearish setup. So we want to be watching for a breakdown retest of this area, and if this could and if, of course, if the FOMC, let me say the Fed officials today, unexpectedly leans towards a dovish perspective, it could drag the pair lower to the downside. So a breakdown retest for me will be just fine as a confirmation to join a sell from this area. So as you can see, we're at a crucial juncture. So let's see if that trend line will hold price or price will break it. So that is what I'm looking at on the USDJPY. Beautiful and simple trading setup. I encourage us all to mark out the structures on our chart, as we will be using it to guide our trading decisions today. So if you have any questions, feel free to let me know in the comment section. All right, so I will be taking the next 5-10 seconds off as always to see if there are any questions before we move on to the final asset on our watch list today. Stay tuned in. All right. I guess we are all on the same page. Oh, thanks for the compliment, trader. Glad to hear that. All right. So I hope we've all marked out the structures accordingly. So let's wait patiently and see how the markets or how price is going to react to this confluence around the 145.100. And of course, depending on what happens here will determine what we are going to do. So a quick recap: we are looking for a double bottom structure or any form of reversal pattern above this ascending trend line to join an uptrend scenario. And of course, we're looking for price to break down, retest this trend line for us to join a sell. So that is basically what we are looking at today. So I wish us all the best of luck on the USDJPY. So moving on to the final asset on our watch list for today. So the final asset on our watch list is my favorite amongst them, and that is the gold commodity, XAUUSD to be precise. And of course, on this asset, we did very well this week. I think this trade moved us from the $1,300 portfolio size. You know, we started the week with about $1,300, and then we were able to scoop in some significant amount of profit from the gold commodity, and currently we are roughly around the $1,554 level thanks to the gold commodity. And of course, what is going on in the gold? So at the beginning of the week, we were buying this asset, though I didn't maximize that bullish move. So this was what we were looking at the beginning of the week. We saw the first signal we saw at the beginning of the week was the breakout of this descending trend line. Remember, we saw price breakouts and of course did a retest of that structure just right around that key level we marked out at the $3,260 area. So if I zoom into the structure, we saw what happened at the beginning of the week. Price broke out of the trend line, came back to retest it, and right here during the live session on Monday, we triggered our first buy position on this trade. Then we also had multiple levels to maximize that bullish move. We had a breakout of the $3,272.50 level where we agreed to add more positions. Then we also added another one at the breakout of the 3,300. I think I missed out on that one, but I did updated us that we should be joining the breakout retest of the 3,300. And look at what happened. We saw price move a phenomenal 1,700 pips to test the 3,438 level, but unfortunately I placed my TP at the 3,360, which gave me only about 1,000 pips right there, and of course I missed out on that one that went all the way to the upside. Then on Tuesday, I mentioned, I think I gave us an update on both my Telegram and TradingView platform around the 3,380. I told us to watch this level closely, that a breakout retest could signal uptrend scenario. I didn't take it though, you know, I don't trade on Tuesdays. A price breakout, which we saw, price moved over many pips, about over 550 pips. I missed out on that one, but for those who took it, well done, kudos to you. Now, during our live session on Wednesday, I think, we begin to notice that the market was consolidating, remember? And this whole consolidation was happening at an important confluence. We had a trend line, remember? We were strongly believing that the momentum would continue to the upside. And of course, we had a 3,380 and we bought. In fact, I had a buy position running during the live session on Wednesday, but unfortunately, that momentum did not do very well. We saw price move up for about 300 pips, locked in about 100 pips before this massive sell-off happened. We saw this happen yesterday. I wasn't trading yesterday, and of course, we saw price drop, broke down the 3,360. For those of you who had a sell stop order below the 3,360, you saw price move over. Remember, we placed a stop loss at the we placed a sell stop order below the 3,360 during our live session on Wednesday, and we saw price move over 700 pips before this buy pressure resumed. Now, first of all, congrats to everyone. And currently, as you can see, it appears gold is rebounding from its lowest point this week as renewed geopolitical risk and softness in the US dollar gradually emerges, reigniting safe haven demand at the moment. And for those of you who are following me on both my TradingView and Telegram platform, you must have gotten an update on what we will be using to navigate this market today. I shared something with us today around the 1 hour time frame, but before we go in there, want to understand why the price dropped. Could it be because of profit taking activity, or can we see it as um, the strength in the US dollar, which obviously pushed the price of gold to the downside? Then another important thing we cannot ignore is the Fed hawkish pause, which we witnessed on Wednesday, which also was one of the major driver to the downside here. And then the ongoing US-China situation and the US-UK trade talks could also reduce safe haven demand, as we can see in the last 12 hours or so. Now, with the way things are going, and considering the fact that sellers are finding it difficult to break through the 3,290, look at the nature, look at the character of the candles around this area. We have multiple hammer candles around this area, which from a theoretical standpoint emphasize that buyers are still present in this market. And as a result of this, we had a new technical setup identified here, and of course I shared this with us this morning. So as you can see, I already have a buy position triggered at the break of the 3,325, just exactly at the resistant line of that descending channel we have here. So I triggered that buy there, and currently is still, I think I've been taken out on that one. I think I've been taken out of the buy. Yes, I've been taken out. I've been taken out with a 90 pips loss. So I will re-enter this trade. So I will place my buy stop order back again. If price can break above this resistant line of the descending channel and the 3,325 level, I'm of the opinion that price could still rise to the upside, thanks to the geopolitical risk premium. We have renewed tensions from the Russian-Ukraine war, the Middle East escalation. Then we had a situation between the India and Pakistan border, which could revive safe haven demand for gold. Then besides this, the US dollar appears to be doing a pullback at the moment. We talked about this on the DXY this morning, giving some breathing room for the upside on the gold commodity. Then traders today will also be anticipating potential dovish stance from Fed officials, which could reposition the gold or make it a defensive edge at this point. So I still have my buy stop order above the 3,325. If price can break out both the trend line, that is the resistant line of that descending channel, and the 3,325, I'm of the opinion that this could trigger an uptrend scenario. And of course, having TP between the 3,400 and the 3,435 is looking promising. So I will place my TP around that particular area, and let's see how the market is going to play out today. Now, in as much as the momentum is looking bullish at this juncture, we cannot ignore the potential that the dollar has been doing pretty well thanks to the recent development in the global market space. And if this becomes the case, especially after the Fed hawkish pause, recovering the US dollar, we will start considering selling. But where do you think is most appropriate to sell? I was thinking to sell along the resistant line of this descending channel initially. However, looking at the character of this candle around the support line of that descending channel, that is having multiple hammer candles, I believe that this is a reflection that buyers are still very strong in this market. So instead of selling there, I want to see price take out the buy positions around the 3,290, and this of course will reflect on the chart as a breakdown retest of the structure before I can start considering selling. So to sell, we want to watch for exhaustion, exhaustion near this area and then break down retest of the 3,290, especially if Fed official reaffirms no rate cuts soon, or if risk flows intensify due to trade optimism. So those are the major drivers here that could influence a downtrend scenario. So at the moment, we have a simple setup. And of course, if you look at this structure again, following this impulsive leg, it looks like we're having something that looks like a double bottom structure where this area is serving as the neckline. And of course, to validate that, we need price to break out, retest the structure. So personally, I still strongly believe that price has a room to climb to the upside. But if the opposite happens and we see price drop below the 3,290, taking out all the buy positions around this area, then we could start considering selling. So it's a simple setup we have here, a range bound structure between the 3,325 and the 3,290. So let's see at what direction price will break out from, and of course that will tell us where price is likely going to close for the week. So that is my view on the XAUUSD for today. I hope I made myself very clear. But if you have any questions, no question is insignificant. You ask me anything and I'm here and willing to be of help in that regard. So I will take another 5-10 seconds off and let's see what happens. If you have any questions before we start rounding off on today's Forex Morning Mastery, stay tuned in. All right. So in the absence of no questions, I guess we are all on the same page. And it's on this note, I think we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. I really appreciate every single time we had together this week. And of course, it was a very, very good week. I think it was the best week we've had so far this year. Moving over... building this account with over $200 for this week, and well done to everyone who has been part of this profitable journey. So today we were able to take on 3 financial instruments: the USOILSPOT, the USDJPY, and of course the XAUUSD, where we have been able to identify simple trading setup to help us navigate the market today. I do hope you mark them out accordingly as we have done. If you have done so, well done, kudos to you. So all we need to do right now is exercise patience and just allow the structures to mature. Sometimes it could take 2-3 hours before the setup finally matures. So it's important we do the needful so that we can actually join at the right time. Let's eat the fruit when it is ripe. All right. So, and for those who joined us for the first time, I do hope you are able to gain 1 or 2 things from the discussions we had today. If you had done so, I look forward to seeing more of you. Trust me, the more time you spend with us, the better you get to understand my analytical approach. And of course, I look forward to seeing you same time on Monday, 9:30 a.m. West African time. That's about 8:30 a.m. UTC. And of course, if you are yet to subscribe to the channel, please do right away, as I will be sharing some insight into my plans for next week, especially on the XAUUSD. And of course, we are going to be running the Forex market prep on Sunday. So the Forex market prep is something we do here every Sundays, where you as my viewers have the chance to tell me what assets you want us to dissect from both technical and fundamental perspective. So I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening and of course a beautiful weekend. Bye.